Hello everyone, it's Steve with Aptera Owners Club. So Aptera stock symbol has shown up on the NASDAQ website finally. If you go to NASDAQ.com and you click on market activity, and then you go over here to IPO calendar, what you'll find is a list of the upcoming IPOs. So here's the upcoming IPO. There's a Picard Medical Incorporated priced at this, and expected IPO date is here. And then you see the priced IPOs, and here they are. And then if you look at filings, you see right here Aptera Motor Company SEV. You click on this, then you see Aptera Motor Company proposed symbol SEV. And then you'll see 30 employees as of June, status is filed, how many shares are being offered. Offer amount. This is a little confusing to me because they're saying that there's 31 million shares offered and the offer amount is 31 million. That seems to propose a stock price of $1 per share, which I don't think is correct because the stock price has not been priced yet. So I'm a little confused as to where they get this offer amount number from. If any of you guys know, please let us know in the comments below. Then you see the address, who the CEOs are, where it's incorporated, how much they're paying to get this offering up on board, and other stuff. And then a little bit about the company. All right, so there's that. But this video, really what I want to talk about was how does the opening price get determined on the day that Aptera gets public and starts trading? How do you discover that? So usually, remember, in standard IPOs, there is a book building process, and they look for large institutional investors to pre-sell some shares. The investment bank kind of finds a price that seems reasonable, and so the investment bank basically determines the underwriting bank basically determines the price. Now, since you don't have that, they need to figure out a way to discover the price. And when we went over this S1 filing, there was a paragraph in there that described it. At the time, it was very confusing to me, and I had more kind of important things I thought in the S1 filing to talk about. But I've gone back and I've kind of done some research, and I think I have figured out how this happens. All right, so let's read it together and see if we can figure it out together. We cannot predict the prices at which our Class B common stock may trade on NASDAQ following the listing of our Class B common stock, and the market price of our Class B common stock may fluctuate significantly in response to various factors, some of which are beyond our control. In particular, as this listing is taking place through a novel process that is not firm commitment underwritten initial public offering, there will be no traditional book building process and no price at which the traditional underwriter initially sold shares to the public to help inform efficient price discovery with respect to the opening trades on NASDAQ. On the day, so they're saying like basically this is not a traditional IPO. The underwriting bank doesn't exist. If they did, they would have determined a price and pre-sold it through this book building process to a bunch of large investors. On the day that our shares of Class B common stock are initially listed on NASDAQ, NASDAQ will become accepting but not executing pre-opening buy and sell orders, and will begin to continuously generate an indicative current reference price on the basis of such orders. So what they're going to do is on the day, let's say like they're going to open tomorrow at before the opening bell, for like 30 minutes to an hour or whatever, several hours before the opening bell, they will start taking orders. People will bid like, hey, I want to sell my Aptera stock for $30. And other people will be like, I'm looking to buy Aptera and I'm willing to pay up to $50. And other people, so anyway, they'll accept orders, but they will not execute any orders. So they'll just be building all these orders. And then they have a computer algorithm that generates what's called a current reference price. And that is the price at which the most number of stock will be transacted. So that's a price that is kind of in between the buy and the sell price at which most of the orders will be completed. And they said this current reference price is calculated every second. And then, so they keep updating this current reference price. They don't tell anyone what it is, but they keep recalculating it every second. Then 10 minutes before the market opens, there is a display only period. And along with other indicative imbalance information to market participants by NASDAQ on its NOII and book viewer tools. So I was like, what the heck is an NOII and a book builder tool? So I looked at this net order imbalance indicator. This is an imbalance indicator about at the opening and closing crosses on NASDAQ given to market users prior to executing the cross. The NOII shows the actual supply and demand for a stock based on actual buy and sell orders 10 minutes before the market closed and 5 minutes before the market opened. So for the direct listing, they're going to give you this. The NOII will give you information 10 minutes before the market opens, which is 5 more minutes than typical. And then the net order imbalance indicator is something that traders have access to. This book viewer is another thing that traders have access to, and it gives you a real-time view of all the buy and sell orders. So they're going to release this information to the public, to the traders, through book viewer and the NOII indicator. And that'll happen for 10 minutes before the market opens. And so so at this point, people may change their buy and sell orders because now they see a price. There was no price given before. People were just like bidding whatever they wanted. Now they see the current reference price. They see the price at which most orders would go through based on what a NASDAQ has collected, and they may change their price. Following the display only period, a pre-launch period begins during which the advisor in its capacity as our final financial advisor to perform the functions under NASDAQ Rule 4120C8 must notify that our shares are ready to trade. Once the advisor has notified NASDAQ that our shares of Class B common stock are ready to trade, NASDAQ will calculate the current reference price for our shares of Class B common stock in accordance with NASDAQ rules. If the advisor then approves proceeding at the current reference price, NASDAQ will conduct a price validation test in accordance with this rule. As part of conducting such price validation, NASDAQ may consult with the advisor if the price bands need to be modified to select the new price bands for purposes of applying such tests iteratively until the validation test yields a price within such band. Okay, this part was a little complicated, but this is what's going on. So basically, during the display only period, people are changing their bid and sell orders, and then they basically have a mathematical model, an algorithm that recalculates the price. And before they've determined these price bands, like they've determined what the upper and lower price that they felt was reasonable before all this started happening was. And then they'll run the model with the new buy and sell orders, and they'll see if that new price is within those price bands. If it's not within those price bands that they expect, they feel like something was wrong. Some calculation was wrong, or they misjudged the market, and they need to either adjust the price bands or adjust the current reference price, one or the other. So that's what NASDAQ Rule 4120C8 is. So they basically keep doing that, and until the new current reference price is within the price bands. It's within the upper and lower limits of what they feel like are reasonable. And so once that happens, that's the final test, and that's called the price validation test. Then that current reference price becomes the opening price at which it opens on the market. And then trading begins, and then the prices will fluctuate as stock prices normally do on the NASDAQ. So basically, now we know how it works. There is a bidding. They collect bids like an auction, and they collect sellers and buyers will put their bids in. They collect it, and then they have an algorithm that generates a current reference price, which is the price at which most orders will be filled, the maximum number of orders will be filled. And then that gets adjusted after they display the price for 10 minutes before the market opens. And then they've determined some price upper and lower bounds, and they will retest and make sure that it's within those bounds. And if it's not within those bounds, they will either adjust the bounds or adjust the price accordingly. And then once that final test is cleared, then they open it for trading at that current reference price, which becomes the opening price of the thing. So it seems actually quite a good system. They basically have an algorithm that maximizes the number of trades at the initial opening price. So that's going to be really interesting to see what the initial opening price is So let me know in the comments below what you think that the opening price will be. And thanks for watching, guys.